That dreaded April 15th date is just looming right around the corner, and I'm sure a lot of us are sweating about that. But no fret, we have a really good friend of the station here with us, Mr. Blake Christian. He's a CPA here to squash all of those worries for you right now. Blake, how are you doing today, sir?
Good to see you, Diego.
Excellent to see you as always. I know that people are always stressed about doing their taxes. A lot of people stress about it year after year, but this year more than others because the tax law, as we know, changed in 2017.
Right, and the due dates changed also.
And the due dates changed as well.
So accelerated for LLCs and
yeah, that's correct.
S-Corps. So those are due this Friday.
This Friday, so even sooner,
Right.
Exactly. So let's talk about some of the major changes that came with that tax overhaul in 2017. What are those changes that are applying this year?
Right, on the individual side, what we saw is a decrease in the top tax rate from 39.6 down to 37. And then that 37 doesn't kick in until about 600,000, so that got stretched out a bit. So that's good for higher income taxpayers. On the bad news side, itemized deductions have been pretty emasculated.
Yeah.
You have a $10,000 deduction cap for your property tax and income tax. So that hits most of the higher income taxpayers. Lower income, middle income are generally winners on this, and then the other winners are people that have their own business because the corporate tax rate for C corporations dropped down to 21% from 36%, which is very dramatic.
Very dramatic drop.
And
absolutely.
then secondarily, LLCs, S-Corps, or if you just have a Schedule C, self-employed, 90% of the time, you'll get a 20% haircut on your taxable income this year that flows from any of those business ventures.
So some major changes there, as you said. I know a lot of major corporations are excited about this drop in the tax rate to 21% to that flat rate. Let's talk about formation of business, though. This has a lot of people, I'm sure, and a lot of your customers wondering how they should form their business if they're doing so, or how they should reform their business this year because of taxes.
Right. A year and a half ago, we would never allow a client to set up a C corp.
Yeah.
You know, I mean, it just, you know, there's 2 layers of tax and everything, and now, you know, you have to look at the facts and circumstances on each business, and a lot of times we're inserting a C corp for a certain part of the business because you get that 21%. What you have to watch out for is on an exit when you sell the business, it can be kind of a disaster. You can end up, if you sold a business that was a C corp versus an LLC, you can have a combined 70% tax rate pretty easily because you pay one level of tax at the entity level, and then when you liquidate, you pay tax at the individual level. So it's pretty tough. But again, if you layer them in and are careful, you can kind of get the best of both worlds.
So the important thing to consider then is really where you are in the stage of your business, whether that's the beginning, the middle, or kind of ending selling stages of your business. That'll really tell you what and where you need to be.
Exactly. And so a lot of times you'll start off as, say, an LLC, taxed as a partnership, or an S-Corp, and then you can always convert to a C Corp once you become profitable, but you want those early losses flowing out. And one of the really very powerful tax provisions under Section 1202, qualified small business stock, it doesn't apply to like service businesses, but for a lot of businesses, they can be formed and meet those requirements. If you hold that for 5 years, when you sell it, 0 federal tax on sale.
That's
Zero.
huge. So it's important to kind of be forecasting where you're going to be going.
You just have to convert to a C corp before you have $50 million of value in that entity.
But 0%.
0%.
Wow. That's major.
Yeah.
So these are some big things that as a business owner you maybe not be thinking of, but you really should be kind of keeping in the back of your mind whether you're going to be making options to sell in the next 5 years, 10 years. Really keep that in mind as you form your business. What are some other major changes that people should really be looking out for this year?
Well, just turning to the state level real quick, not dramatic, but they did conform to most of the 2017 Tax Cut Act, and so that's good news. The one that they didn't is the powerful Section 199A, which is the 20% reduction in taxable income. They did not adopt that. They also, not huge, but they gave us a 0.05% decrease. So now instead of a flat 5%, we're at 4.95.
4.95.
It's nice that we're bucking the trend here of tax increases in a lot of other states. So
definitely. So it's good to see that there. So nothing major in terms of Utah, but definitely keep our eyes out for any changing legislation that could be coming our way for sure.
Right.
Very possible.
And as we were discussing, and you covered recently, the
House Bill 441.
Yeah, 441, which would impose tax on services, which is near and dear to our heart and a lot of our clients' hearts. So thankfully, some public backlash on that has at least sidetracked that for a while.
But the important
it may
note,
be back.
The important note there is that it will be back for
Right.
sure. It will be back. So keep your eyes out for House Bill 441. It'll definitely make its way back in a special session. It had a huge support from the GOP establishment, huge support from the governor. So definitely, as citizens, do a great job at keeping your voice heard on that one for sure.
And it has an impact.
Definitely. Well, thanks for updating us on all of these major changes to the tax code. But let's talk about your business in general. HCVT, what are some of the services that you guys offer, and how can people get in contact with you?
Right. Well, our practice is primarily for, we do tax planning and tax compliance for businesses and then also high net worth individuals. One of the other major provisions on the federal side is the Opportunity Zone program.
Absolutely.
And that is where you can roll capital gains from almost any asset that you sell, not just real estate, into one of these funds, defer tax for 8 years, and once you hold it for 10 years, all the appreciation after you invest in it again goes back to 0%. And so we're setting up, right now I'm working on actually forming various Opportunity Zone funds. We're probably at about $1 billion right now.
Wow.
And
this is huge.
There's so many gains out there from company sales and things. This is just a great diversification vehicle.
Yeah, wow, that's phenomenal. Well, Blake, thank you so very much for coming on. We really appreciate it.
Great to see
Thanks
you.
for keeping us updated and educated. Did want to mention as well that Blake Christian and HCVT are the title sponsors of our Red Carpet Sundance coverage. If you missed any of that, be sure and head to our YouTube, Park City Television, and check out all of our great red carpet coverage. Thanks to Blake Christian and HCVT for their sponsorship there. We're going to continue with more on this Business Wednesday right after this short break.